Hello and welcome to ET Now. I'm Ashwin Mohan and you're watching Amicus Curiae, where we get you news and views from the world of corporate law, tax and regulatory affairs. And this week, it's a no-brainer. We are going to discuss the pros and cons of the draft Model GST Law that was ushered in by the government and is now open for comments from all the stakeholders. And to throw more light on the pros and cons of the format that has been laid out and the roadmap that has been laid out by the government, we have with us Uday Pimprikar from EY and Amit Sarkar from Grant Thornton. Gentlemen, thank you so much for taking our time and joining me on the show. Uday, let's kickstart the discussion with you. Something that was eagerly awaited by the entire industry. Now at least there is a format that corporates can look at. And of course, busy times for advisors like you.
Well, I agree about the busy part. Yeah, you're right. I mean, the entire corporate world was looking at getting some amount of indication about the overall structure of GST, what's included, what's not included, what would be the nuances, and I'm fairly a bit worried about it also, in a sense that because it was, I mean, people were trying to plan in almost nothing to go on, you know. And getting some kind of a draft law right now, which is an official version, and which possibly promises also some engagement with the government, that I think is good.
Amit, achieving political consensus today is perhaps not as difficult for the government as it was at one point of time, right. Because there was a huge GST logjam. Things are looking a little more positive right now, and hopefully there will be some success for the government in the upcoming session. Now, if you look at the draft that has been laid out, do you think there's enough legroom or enough window for the corporates to be ready? Because, say, perhaps in some other overseas jurisdictions, the gap hasn't been this long.
Well, if you see how the corporates are actually looking at GST over the years, some of the larger corporates, Indian conglomerates, MNCs, had already started some kind of groundwork. They had tried to either, manage it in-house or bring in external consultants to at least start some foundation. 2/3 of India, obviously, were playing a wait-and-watch game, and they will now have to play catch-up for sure. There is a code available. It is in draft form. It will be, probably customized and after representation changed a little bit here and there. But at least there's a structure that is now available. So now it's up to those corporates, the balance 2/3 of India, for them to now play catch up. Is the catch up period enough? Now that depends upon when we believe realistically GST will be implemented. The official deadline given by the government is we're going to try our best to make it effective from 1st April 2017. Let's be reasonable. It'll probably be more of, July to October 2017. So you do not look at an 8-month period. You do believe that you may have probably a year or 15 months. But then there are many ifs on that aspect as well. This government, both the center and the alliance partners in the states have already created a reputation of being fast movers, right? So all hands on deck, and the syllabus is out. Time to write the final exam.
All right, well said. Yeah. Uday, let's look at some of the various elements of the draft Model GST law. If you look at the threshold limit that has been prescribed for registration is aggregate turnover exceeding rupees 9 lakhs and 4 lakhs for the Northeast states in a financial year. What do you make of the threshold limit to start off with, in terms of the ambit at least?
I was a bit surprised, to be honest.
Why?
Primarily because the initial thought process was to have a slightly higher threshold limit so that the overall compliance, and the compliance is fairly cumbersome, is not subjected to the small taxpayers. They have brought in, so what our initial expectations were that threshold limits would be slightly higher than this for the basic registration and payment of tax. It was also expected that the composition levy, wherein you just kind of pay X percentage of your overall turnover for the entire compliance, would again be at a higher level than what it is today. It's 50 lakhs, up to 50 lakhs. So that's an aspect that they would need to reconsider. I think they would need to increase the threshold limits.
And even the revenue collection cost will also go up.
So what are you achieving? It becomes like a query. But then maybe that is something which was one of the elements of driving the consensus with all the state governments, because they might be wondering as to how much of revenue loss are they looking at, since in the state laws, the threshold is far lower than the central laws. So maybe it's a compromise, so that can be thought through. But yeah, you should look at maybe increasing the threshold for people who can claim composition. Maybe that could be a good way.
So to cut a long story short, how much would you want the threshold to be changed to? What level would be fairly reasonable?
Okay, anything below 25 lakhs,
okay.
To my mind, again, and 25 lakhs again is a fairly conservative number vis-a-vis a state government, would be counterproductive, okay, and generally counterintuitive towards the entire tax reform agenda.
Now let's look at another aspect that's caused a lot of concern, at least in the e-commerce space, and that's of course the taxation of e-commerce transactions at the point of supply. Amit, help us understand, if I'm say a Flipkart or a Snapdeal or a Paytm, why will I be worried because of this, and how will the rules of the game change for me?
Let's look at how things will eventually turn out. You have an e-commerce player, you're telling him to collect tax at source. Okay, we do tax withholding under income tax. Maybe I will accept. It's still a big maybe.
All right.
Second, you're asking me to upload information on a monthly basis. Okay, I'm ultimately a technology player, so maybe I will be able to provide that. Again, that's a maybe. But then you're asking me to give an explanation if somebody else has not done something similar. Now that's where the maybe stops.
Okay.
Now you're really getting to a stage where effectively I'm being assessed for what business I'm doing for myself, and I'm also being assessed for what business my channel partners would be doing through me.
So compliance becomes really difficult.
It's absolutely double. And let's also look at the e-commerce business also when we talk about this. E-commerce actually have two groups of customers. They have the customers like you and me, the buyers, and they also have sellers. Sellers are also customers for them. You're effectively asking them to have a commercial rethink in the way in which they'll be doing businesses with one group of their customers.
Absolutely.
Right? So it's just a three-dimensional hit for them. My commercial transactions with my sellers who are also my clients is impaired or is influenced by GST, put it that way. My tax compliances and administration gets doubled, and I'm still questioned.
All right. Uday, what can be done to get out of this mess? Because I'm sure that there will be a lot of noise made by the e-commerce players. I'm given to understand certain representations are already on their way to the government. What do you think can be done to ease the pain here?
Assuming that any clerical error, any mismatch would trigger a straight demand and questions. That's a scary scenario. And you are exposing millions of people and assessors on that basis, based on mismatches of data, I think is fairly punitive. And
so do you think that should be struck down altogether?
To my mind, significant rationalization on that entire construct of imposing tax. The moment there is a mismatch of data, it needs to be looked at.
You mentioned refunds, you mentioned claiming credit. Does the bill have anything new in these aspects to make it administratively easier? You had a point?
Yeah, several things. Okay, which are, some of it is good news, some of it is not. Okay, I mean, some of it was known, maybe, so comparatively it was. To start off with, the expectation was that the credit mechanism would be wide enough to allow credits where I need not necessarily kind of look at providing individual nexus to whatever I'm doing on the output side. Okay. The law, as it turns out, okay, unfortunately does not give that expansion in credit.
I'll have to quickly get an Amit over here. Amit, do you concur with him? A lot of grey areas in the credit and the refund aspect in the bill or in the draft model law?
In a phrase,
yeah,
there has been no change materially
at all
in the credit rules from what it was under the current law to what it should have been under GST. And that's probably what Uday is alluding to. You always had this problem of legislative filters, restrictions, conditions, nexus, and so on and so forth.
So administrative burden not eased?
Not on the credit front for sure. We've read and reread and reread, and now we're playing a game in office in terms of what phrases have been just copy-pasted from the current law into GST.
All right.
It appears that maybe as a discussion draft, this is like a de minimis starting point. This is the de minimis credit that we as the bureaucrats or policymakers are willing to concede. Now come and talk, justify your claims, and maybe they'll make consequential amendments. That's all we can hope for. Because in the way in which the credit provisions are going through, one of the fundamental promises of GST is certainly not going to get met. If you're going to increase the GST rate, let's take for services. Services is going to be a straight 3 percentage point increase from 15 to maybe 18% as per popular consensus. People are still happy to take that. Why? Because they're hoping to have a wider pool of credits to offset that incremental liability. So it becomes a wash transaction. But if the restrictions still remain, the artificial value addition on which you're levying a tax, and that too at a higher rate, will start to really pinch. It's already pinching people in the services sector at 15%. At 18, it will just pinch that much.
So, Amit, we have to slip into a break. So, what's your one-line message to the government on the refund and the claiming credit bit? What can be done to the already existing draft model GST law?
You have inputs that you use for creating a structure, for taking care of your employees, and for outside costs. Choose between structures and employees. One of the two groups of credits should be released.
All right. All right. On that note, we'll have to slip into a short break. Stay tuned to ET Now and keep watching Amicus Curiae. On the other side, we discuss a few more aspects of the new draft model GST law. Keep watching the show. Welcome back to Amicus Curiae. Uday, you had a point on the credit front relating to stock transfers. What's the spot of bother over there?
No, the issue is twofold, actually. One is that conceptually the law requires you to impose a tax, okay, or at least appears to suggest that there are tax payable for any stock transfer, and one would assume that interstate stock transfers between two taxable persons, and taxable person is per registration and so on and so forth. Now, if you're going to first impose a tax on finished goods, one can understand, even capital goods, one can actually identify. But if you're going to start imposing a tax on stock transfer of services, okay, then you're getting into a fairly hazy world. Okay, how am I going to compute a stock transfer for an organization like, let's say, a consulting firm like ours, where we have got about 8-9 offices, that office works seamlessly, or for that matters, a network like yours for that matters, as to one office providing a service to another, and so on and so forth. And it is of no avail, because it's not as if it's going to add up any revenue, because anyway the recipient is going to be eligible to claim the set-off. And some of these aspects, I think, need to be definitely be considered with regard to just taking it away from the overall setup. So that is one. The second bit is on the credits aspect. Okay, the overall procedure is prescribed for even granting the credit is quite ominous. Okay, you have a threshold limit of whatever you have, and then you are going to impose a burden of allowing credits only when taxes are kind of actually deposited, seen, uploaded, and so on and so forth. I'm not entirely sure whether all of these cumbersome compliances and fairly punitive compliances, because your cash is off the table if you're not able to do it on a real-time basis. I think it's going to take some doing.
So this requires further simplification.
Yeah, absolutely, no doubt about it.
Now we have to move across and also speak about some of the powers that have been granted to the tax officials as part of the draft model GST law. Amit, they've had discretionary powers earlier as well.
Right.
The bill talks about arrest powers. The bill talks about imprisonment in severe cases. Any shocker over there?
Not much. We are already in that direction. The current indirect tax laws do allow those powers with the consequent checks and balances. In principle, the same powers with the same checks and balances, probably tweaked a little bit in terms of what amount of turnover that you are really requiring to breach to get into a 3-year imprisonment versus a 5-year imprisonment. Some rationalization is done around that.
Right.
But really the powers, what I call the quasi-judicial powers that are being already in existence continues.
It's been fine-tuned a little bit.
Yeah. There are obviously a lot of, how do I put it, automatic punishments granted, because remember, we are looking at a tax administration which is going to be real-time online. So as Uday has been mentioning, if my data does not match with my supplier's data or with my customer's data, one of us or both of us will end up automatically paying an interest. So there's a cost of an erroneous data upload, and that's automatic.
What about dispute resolution and curbing frivolous litigation? The bill speaks about the setting up of a...
Again, if we talk about...
is it the same as...
It's the same. It's the same. What they're saying is you have to pay that 10% if you have to go for an appeal. It was there under the central laws. Maybe now it is coming all the way down to the state laws as well. State laws, you have to go through a state protocol and then go for a merit hearing in an appeal process. Now you'll have to just do a pre-deposit and discuss the merits straight away. Expectation is that the 10% pre-deposit is adequate to shelter frivolous litigation points to come out. But there will be a lot of litigation points that will come up precisely on this issue of data mismatch. Okay. And let's just think about this for a moment. Essentially what the legislators want India to do is every purchase, every sale by everybody beyond 10 lakh rupees must be uploaded by the 10th of the month. I hope India has squared up their server space on this. These are multiple terabytes of data getting uploaded, and there have been huge amounts of data that gets uploaded anyways, a corporate tax return, your normal excise service tax returns, and we have, as people who handle compliances for many clients, been painfully aware of servers hanging up.
All right.
Now what happens if I've uploaded my data, information uploaded from my database is as accurate, the server sneezes, and the corrupted data gets uploaded.
IT backbone really is going to be crucial.
It's huge.
Uday, in terms of settling disputes, or in terms of creating an atmosphere wherein even if there are differences over interpretation of law, do you think the bill is fair and reasonable when it comes to the forums that are open to the taxpayer and the SSEs?
If I'm honest, I don't think so. I mean, we are looking at this as a tax reform, okay? The present bill, the draft law, is clearly made by people who are genuinely anxious about revenue, okay? Is it a tax reform bill that has come about with from policymakers who want to kind of look at the clear, genuine objectives of, or at least part of the objectives of ease in doing business, tax certainty, and so on and so forth? I think that balance needs to be reached, and needs to be reached quickly. We expected maybe far more from this particular bill, and hopefully till the time it gets to the final stage, maybe a lot of it will be rationalized.
Any big misses in this bill, in your opinion, over and above what we have already discussed?
I don't think that from a revenue collection perspective, there are any misses. Okay, they have looked at all their problems and they've covered it fairly minutely. And I think that's the biggest miss, okay, that you're trying to put in 100% compliances down everybody's throat when you yourself as an administrator may not be entirely out there, both culturally and otherwise, in place to get that, manage that. One thing that I missed a little bit is ability to compound offenses and move on in life.
All right, the settlement bit.
Settlement is there, but settlement is a slightly different kind of gamut. Most international jurisdictions allow you to not, instead of going through a settlement, go through a compounding kind of phase where you agree to disagree, but still kind of settle an amount and move on.
I get.
And that's something that I think can be put in. The second bit that I'm genuinely worried about is the fact that while we have put in a lot of dispute resolution mechanism, are you going to build up adequate capacity in the right forum to deal with it? Here we have got a threshold limit of 4 lakhs and 10 lakhs, 5 lakhs and 10 lakhs for payment of tax. But at a different level, okay, you've got fairly punitive measures for disallowances and so on and so forth. The key thing would be, how are you going to deal with all the disputes that have come about? Because the disputes are going to come
up.
And fairly wide.
Amit, we're running out of time, so
Sure.
closing comments from you.
Yeah.
A few of the big misses which you would like to highlight, and also, before we end the show, the whole concept of ranking GST taxpayers, how do you think that's going to help?
So I think in addition to what Uday has mentioned, remember we've been looking and waiting for this legislation to come through for the last several years. So I would say that the lawmakers had enough time to get their heads around some of the more important questions, such as incentives and their treatment. Some direction, because if you have come so far to give us the basic construct, you might as well have at least told us whether you'll be replacing a exemption scheme with a moratorium or a deferral or a remission. Give us some hint,
So that
something that we can actually then deliberate about.
Okay.
Or will you just surprise us with saying, okay, it's over and here's the alternative and take it or leave it? That's actually what is becoming a very big question in the eyes of many of the larger companies. What will happen to incentives?
All right, what else?
What will also happen to the way in which some of the product exemptions have come through? Take textiles, take food, processed food. The way in which you're looking at giving incentives to some of the startup or emerging sunrise sectors like electronics, auto parts, and so on and so forth. How are you looking at that? You're bringing back transaction value as the a value on which a GST will be paid. And there's an entire generation of people who have not understood the concept of transaction value in the industries where transaction value become very relevant, like FMCG, like pharma. There's already queries coming out in terms of what happens to treatment of free samples, what happens to take one, get one free, those kind of questions already. And that's just the tip of the iceberg. So all the 15, 20-year-old unsettled principles of transaction value will start re-emerging. Think fiat valuation. What happens there? Because you also have this question of computed value and declared value in the valuation rules. So there are these areas where some of which is probably a reaction to having read the draft bill, but clear misses in terms of giving some hint would be treatment of incentives, product exemptions, how are you transitioning them out? And obviously the most important question, now that you've given us a construct and a platform, what is the rate on which you'll be charging GST to us?
Yeah, that's
the big question, isn't it?
That's the biggest question. 10 seconds, ranking of GST taxpayers that has been mentioned in the bill. How do you think this is going to...
To my mind, I think ranking ranking without a pure kind of measure around it, I don't know what it means. It gives you some indication. And the question also is that, it is, while it is an initiative, if that initiative is appropriately handled, then it will make some sense. But if you're going to rank a person because of some disputed demand on some technical matters, so we'll need to kind of see.
Last word.
Ranking, the only logical reason I see of a businessman making use of ranking is, again, going back to our pet peeve about data and data validity. If I have a vendor who's relatively higher ranked, I have at least some assurance that his data is accurate. So hence, if I want to claim credits, I have better certainty of claiming credits from him than from somebody else. That can be the only reason where I see as a businessman taxpayer any benefit coming to me by getting into a ranking. Otherwise, what Uday mentioned, the question about what is the content you will use to rank, question mark.
All right, I'm sure the government will throw some more light on all the issues that have been raised in the coming days. And in fact, let's not forget, this is a 190-page bill, so we have tried to...
the effort has been brilliant.
Yeah.
I think it's a step forward. I think we need to laud the effort that the bureaucracy and the state finance ministers have put in place. Now is the time to have an open mind and an open heart and engage in deliberations based on the actual objectives. If that's achieved, then we have a good thing going.
Thank you so much for taking out time.
Thank you.
And helping us understand some of the key takeaways from the 190-page new GST draft law. Thank you so much once again.
Thanks.
Thank you. Thank you.
With that, it's a wrap on this edition of Amicus Curiae. This is Ashwin Mohan signing off. See you next week.